Hey, it's Michael Tiny Saul. This video is recapping trading action in Apple for Thursday, December 6, 2012. Why have I decided to do a video on Apple? Because I have been talking about Apple in my morning email, and I actually sent out a special email on Thursday on top of the first email I sent out, just highlighting a potential opportunity on the long side for Apple. So let's talk about what I saw, lay it out, and then we'll talk about how I commented and managed it intraday in the live trading room. So Apple has had a nice bounce off the lows in mid-November and fell just shy of the 200-day moving average, despite what some super gurus were saying was a lock to get there. Of course, they don't mention it, but they'll talk about the 2-point gains that they had, that they got lucky in other stocks, but not this one where they were long and totally got drubbed there. But anyway, that's another video. So on Tuesday, the stock got hit a bit. It gapped down and it closed not at the lows, but it closed below its open. But that was just the beginning, because on Wednesday the stock gapped down and really just put in a solid trend day down, closed at the lows, and just got whacked. And there are a lot of people coming out there talking about how, oh, Apple's broken, it's never going to be the same. We've seen the all-time highs, it'll never get there again. And I don't know if any of that's true. But what I do know is that when there's that kind of talk and when there's so much buzz around, even more buzz than usual on Apple, that it's going to present an opportunity. All right. So on the 6th, which I'm doing this, recording this on the 6th as well, on Thursday the 6th, when it was gapping down, I don't know, 9 points or whatever it is, I said, okay, this deserves a special email, because there's a chance that it's going to be very close to a reversal, and we have to be on our toes to watch it. So let's talk about these lines. This green line fills a gap right here. Right, this is the high of this bar right here, and the gap is between the low of this bar and the high of this bar. Right, it went forward in time. Boom. This purple line is the close of this candle, and the difference between the close of this candle and the low is called the lap. So the green in this low is a gap. The purple in this low is a lap. Okay? A gap actually takes place outside of the range of the prior candle. So these are the two levels, the close of this day and the high of this day. And this green line you can see is a little off. I didn't set them up exactly because, as you'll see, it's not important. All right? What's important is what happens around those areas. So there are your two support points, and then this orange line is the 78.6% retracement, Fibonacci retracement of this bounce up, this whatever it is, multi-week bounce. It was a pretty decent bounce, right? Not in time, but pretty decent in price. So you have 3 levels to watch, and those are the levels that I pointed out. So let's go to the 5-minute chart. So the 5-minute chart had a monster gap down with a lot of volume. Now, it's not strange to see a lot of volume at the open, because that's usually where the volume comes in, right, is at the open. But look at this 5-minute bar of volume. Just absolutely huge. All right, big volume on one bar. And let's see what it is. What is it? Let's see. It was 3.76 million shares on one 5-minute bar. So what is that? It's short-term climax, right? Trends end in a climax. So this was a big move down. It opened up below the gap, right near the lap, and then whipped through that 78.6 on high volume. But look what it did the very next bar. It offset the down move. Now in the chat room, I was talking about the 1-minute chart. I had the 1-minute chart up, and I was showing everybody that it's now a V reversal. So what do you do with a V reversal? couple of things. You could either buy this, okay, buy the break, or you could wait for this. And this is exactly what I drew out in the chat room. It may not be a perfect retracement like this. It may go down a little deeper, but you draw a consolidation and you look for the break. And then from there, it was just classic pattern analysis. Just kept moving up. And then it peaked down at its high right into lunch, and then it chopped around. But it was a beautiful opportunity down here. And all the people that were looking to sell it late, you know, what happened? They got hooked. The aggressive bears, I guess the 30-point down day or whatever it was on 30-something point down day on Wednesday wasn't enough. So now they think, okay, now it's time to get in. And, you know, I wrote a tweet out and I said, when all else fails, take advantage of the latecomers. Right? There are 3 stages of a trend that I'll be talking about more when I get the education videos up. But, you know, the last stage are those that are late to the party. And those people that are late to the party will always wind up getting hooked because they'll be buying the low, they'll be buying the high, or shorting the low or close to it. Now, if you shorted the open on Apple, you could have made money as long as you didn't overstay your welcome. But the trade that had the profit potential in it was not going with what had happened the previous day, but waiting for that to get finished up and then catching a ride the other way. All shorts were satisfied on this move. Okay, anybody that was short pre-market at the open, the previous day, the 5th, the 4th, whatever it was, okay, they were all satisfied by the time this had gone down like this. Then you got the reversal where the bears couldn't keep the pressure on it. Bulls came up with it. Consolidation again on the 1-minute chart. And then it was off to the races. So that's really it. I wanted to go over this and to have you stay aware of patterns like this. It doesn't always have to be Apple. It could be the market overall. It could be plenty of other stocks, and not just the big, just like Google and Chipotle and Amazon. It could be a lot of stocks. It could be stocks in the $10 or $20 range too. Okay, so that's it. And if you have any questions, feel free to contact me, and I'll be sure to get back to you as soon as I can. And I hope you enjoyed this, and I will talk to you all soon.